This is the Asia Trade. I'm Heidi Stroud-Watts in Sydney, where the markets have just opened. The top stories this hour. An AI wake-up call for investors as Chinese startup DeepSeek undermines evaluations, fueling Wall Street's bull run. The rush for safety sending Treasury yields to their lowest this year. Nvidia leading the plunge with a $589 billion slide in market cap, the biggest in history, but it welcomes the DeepSeek model as an excellent advancement. And the company at the centre of it all forced to restrict new sign-ups after what it calls large-scale malicious attacks. Well, we are bracing for quite a turbulent Tuesday here in Asia in light of that bruising session on Wall Street. Cracking appears in the artificial intelligence trade that has really been fueling this extraordinary bull market that we've seen. And of course, all of this being triggered by the cheap AI model from DeepSeek, the Chinese startup, climbing to the top of Apple's App Store and of course fueling these concerns, which to be fair would have been there already, about these overvaluations when it comes to big tech and how they can be justified. We are seeing though a little bit of a creeping upside when it comes to the ASX 200. We're up by just about 0.1% at the minute. We're expecting quarterly inflation data this week. That could be kind of pretty key when it comes to the timing of the next RBA move and when that easing cycle might finally begin. Chicago Nikkei futures, when it comes to expectations going into this session, could be quite a tough session when it comes to Japanese stocks. Chip-related shares are really poised to extend. What we saw was a sell-off that began on Monday after these concerns over DeepSeek. So this selling spree when it comes to Asian tech and chip-related names in Korea and Japan are set to continue this week. Dollar yen largely unchanged at that 154 level. Switch out the board to take a look at US futures, and we're looking sort of a little bit to the upside there. S&P futures, they're holding their own. We're seeing Nasdaq 100 futures potentially seeing something of a rebound, which should be quite interesting in terms of that broader narrative on Nvidia and what it means for richly valued US chip names in particular. New York crude at the moment seeing a little bit of downside there. Traders seeing President Trump choosing tariffs over sanctions at this point, so quite a bit of risk-off sentiment when it comes to crude markets on the political front. Let's take a look at Nvidia. Of course, this is really the big story that we've been watching in terms of one name, and the one name that has been driving this bull run for AI exuberance. A record market cap there dropping, with the value really being sent reeling on the DeepSeek shock, the largest in market history. Let's bring in Bloomberg's AI reporter Rachel Metz for more. So, Rachel, we've obviously seen the outsized reaction, and to be fair, perhaps matching the outsized bull run that we've seen. What do we know about this scenario in terms of whether it fundamentally kind of reshapes and certainly shakes up our understanding of this trade in terms of value?
I mean, I think it shows that lots of people in lots of different places can make advances in AI. You're seeing a company that by many accounts was constrained in terms of the resources they could access. They're very smart, and they made a really powerful model that a lot of people are finding really interesting. There have been a lot of different reactions to this model. Obviously, the stock market's reaction is one, but there's also, I think, a lot of enthusiasm within the industry, people wondering how they did what they did and curious to sort of keep moving ahead and figure out how they can make their models more efficient, use chips more efficiently. This doesn't mean that we're not going to be needing chips from companies such as Nvidia. It's still extremely expensive to run models, for instance, and just because you might want lots of chips for various reasons, even if you don't have to have them to build your model.
And, there's certainly, of course, a side of the argument where there's quite a bit of skepticism and doubt and suspicion over whether, have they really managed to do this? But even Nvidia has, kind of given credit where credit it thinks is due.
Yeah, I mean, Nvidia seemed to step up and say that they thought that it was an interesting advancement in AI. And I mean, frankly, the people that I've spoken to in the field, by and large, find it very interesting, and they're interested in figuring out how they can make their own advances with efficiency. DeepSeek has clearly made some really interesting moves as far as making their model work with less memory, with reinforcement learning, and with efficiency as far as using compute. And I think a lot of other companies find that fascinating, and they'll be trying to figure out how to move toward that.
What does this tell us about the vulnerability of what Silicon Valley has been focusing on?
I think it tells us that big advances are not necessarily going to come from the biggest players or the most well-known players. I think the industry at large, I think, has always sort of kept an eye on lots of different players, but this surprised a lot of people. However, people that are inside the industry were aware of this company. I mean, it certainly did not come out of nowhere.
There's been a lot of conversation about the lack of moats around the foundation model business, right? And also to the fact that this is, we're sort of talking about it now, and obviously this is where the attention is, but DeepSeek has been around for many months. Does that kind of tell us about what they should be focusing on in terms of the competitive landscape for these Silicon Valley businesses?
I mean, I think you're going to keep seeing companies work on these reasoning type models, these models that mimic the way that people reason. That's what a lot of people are excited about as far as DeepSeek. And it is really important to keep in mind that these types of models, this way of putting together these models, it's very new. And it's not something that people have been doing for very long or have much of. So I think you'll see a lot of focus on that, both from smaller players and bigger players. And this has really, I think, galvanized that.
Bloomberg's AI reporter Rachel Metzer with the latest, and a lot of questions remain, in particular when it comes to where to next for this tech-driven bull run. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage, and we are kind of bracing for the reaction again in this session in Asia. But we were joking just before, who knew that some of these stocks were perhaps overvalued, just a touch.
Yeah, that's right. Well, I mean, that's it's been one of those rallies where every time Nvidia and the Mag 7 and NASDAQ 100 went higher, people would scratch their heads about these extreme valuations, start talking about how it was echoing the dot-com era, and then Nvidia would have a launch event, or there would be something else that occurred. TSMC would come out with earnings, and everything would take off again. So it wasn't quite a hated rally, but it was definitely a feared rally. There was that growing concern that at some stage it was going to turn out that it had gone too far, too fast, for too long. And again, this just may end up being another dip buying event. It's a little bit too early to tell on that front, and one of the things that will help to give us some potential answers is that we have tech earnings kicking off on Wednesday in the US. Wednesday's going to be a very big day because we've got tech earnings and we've got the FOMC. So there's a lot of potential chickens that could come home to roost, so to speak. Very old technology metaphor there for a very new technology concern. So that is going to hang over risk appetite in general. In Asia, the read through is going to be really tough because South Korea and Taiwan and China, by the way, they're all off for several days. I think Korea gets back on Friday. China's off until next week. So there's a difficulty there in working out where things are going to go. It'd be interesting to see how Japan goes, especially SoftBank is a big part of the Trump-backed Stargate OpenAI initiative. How much sense does it make to spend an alleged $500 billion on those technologies that they've been looking at when you've suddenly got this curveball about there may well be an alternative?
It's interesting and perhaps unfortunate that we have to have that delayed response from China, because it would be super fascinating to see whether this kind of has an impact on broader Chinese equities and in particular tech names. But I do wonder, does it take the shine off the US exceptionalism story, the correlation that we've seen between the dollar and Nvidia, for example?
Yeah, well, I mean, that's something that was very noticeable overnight, was that normally Nvidia and the dollar have tended to move together. That US exceptionalism meme that you talked about, that didn't happen so much overnight. I mean, the dollar had a very bad day against the yen. That was because yields came down a lot. But against most other majors, it did very well, which to some extent could also be, I mean, I know, of course, the situation is totally resolved by now, but the Colombia-US tariff confrontation did remind people that tariffs are still a potential issue, and that's still something that on a reflex level will send the US dollar higher. So I think that's also part of what's going on when you look at Nvidia and the US dollar. You're potentially breaking that correlation that had existed.
Garfield Reynolds, who leads our Marcus Live Asia coverage, and as Garth mentioned, US politics and President Trump's sort of incoming policy changes, particularly when it comes to tariffs and it comes to migration, still top of mind, even in this market that at this point have been sort of more on the comfortable side of what it's seen so far. We do have some breaking news. Scott Bessent has been confirmed by the US Senate as Trump's Treasury Secretary. This was expected. In fact, we heard from President Trump at a GOP retreat just in the last few minutes saying that he had enough votes there. He's also spoken a little bit about, wanting to keep his policy promises on no tax on tips, on Social Security, and perhaps some of the reprimand when it comes to tariffs and sanctions on countries over migrant returns. But Bessent there being confirmed by the Senate as that vote on his nomination is still ongoing. Let's bring up political news director Jody Schneider, who joins us now in Washington. So, Jody, there's so many moving pieces as to what we've seen in the very early days of the Trump administration. We're seeing the Bessent confirmation ongoing now. The pieces are really sort of falling into place.
Yeah, so Donald Trump has been able to, on a domestic level, do what he wanted to start doing in terms of the deportations, the immigration orders, the orders on what he calls DEI, getting rid of diversity as a hiring hallmark in the federal government. We're having a hiring freeze for the federal government, doing a lot of things on the domestic side through executive orders, and then also in foreign affairs. He has talked about tariffs, and he has used tariffs as a wedge to try to get what he wants on other fronts. We saw that most notably this weekend with the country of Colombia, where earlier in the day he said, if you don't take people that we want to send back to Colombia, we are going on military planes, which is somewhat different than it has been in the past. We will impose a 25% tariff on your goods, and we'll raise it to 50% the next week. By several hours later, there was an announcement from the press secretary that Colombia had indeed agreed to do this, thereby warding off those threatened tariffs. So the president has been successful in his first week in kind of doing what he said he'd be doing on these different fronts. Some of these things are going to require that he go to Congress, and that will be the next step. We saw him tonight with the House Republican leadership down at his golf resort at Doral in Miami, telling them that he now wants to take the next step. He wants them to start approving what he needs approved to be able to do things like extend the tax cuts.
And we're hearing just commentary now over the last few minutes from President Trump speaking in Florida, saying they'll keep his promise when it comes to some of the Social Security and tax measures, but also key is the threat of tariffs again on migrant returns on some of these countries. It's interesting, I thought, saw Chrystia Freeland, who's of course one of the candidates to replace Justin Trudeau as the Canadian Prime Minister, calling for an international summit of, I guess some of these nations that might be aggrieved or targeted by President Trump's administration when it comes to trade and tariffs. Do you think we're likely to see more of, I guess, a international alliance in terms of how some of these countries might be able to minimise the impact?
Yeah, I think that's probably a next step. Right now, given that it was the first week of his administration, executive orders coming fast and furious, news conferences coming fast and furious, he did sort of have this sort of sense of inevitability in what he was doing and what he was proclaiming. But after this, there will be, the countries, especially Canada and Mexico, who basically, he has said around February 1st, he hasn't set that as a firm deadline, but he said around February 1st, he will start imposing tariffs on them if they don't agree to measures he wants in terms of things like immigration, things that will be a little bit more difficult to agree to than Colombia did yesterday, for instance. Now, whether he's quite serious about those kinds of tariffs, we still don't know. And one of the things he doesn't want to do is roil markets. Markets were roiled today, but by something else. But Donald Trump pays a lot of attention to the equity markets, to things like the S&P and the Dow Jones Industrial Average, and he doesn't want to see sustained, down days in those markets. He just doesn't want to. And if tariffs were going to do that, one might think that he might hold back on them. So far, he hasn't imposed anything, and he has not come out to say what he would do with tariffs with China. He has used them as a threat, and a successful threat thus far.
Our Bloomberg political news director Jody Schneider there. We're hearing from Donald Trump speaking at the moment saying we'll put tariffs on people who mean the US harm. Well, coming up on the Asia Trade, AustralianSuper CEO joins us to talk about the growth outlook for the country's pension industry. Asset manager DWS will be telling us why they favour banking stocks in Japan. Plus, we get more on how Chinese AI startup DeepSeek is disrupting the market with DGA, Albright, Stonebridge Group's Paul Triolo. Much more is ahead. This is Bloomberg.
There's no question that this could be a potential game changer.
It's a game changer for the Mag 7 stocks.
Tech has to be okay simply because it's such a large weight in the market. And if tech is not okay, the entire market goes.
We're all tied to these 7 stocks, and in particular, we're all tied to Nvidia.
It looks like the story is China is not as far back as what people thought. They are much closer.
Now China looks like a very viable competitor, and a competitor that, perhaps might catch the ire of the Trump administration.
This has got to be a core concern of not just the Trump administration, but all the tech universe that has moved into the West Wing.
The U.S.-China trade wars and the restrictions on chips and things like that could get even more heated, which will bring more volatility to this market.
Some of the comments on the tech sell-off driven by DeepSeek. Let's take a look at some of the winners and losers when it comes to some of the names that we've been watching. And obviously the biggest loser that we've seen has been Nvidia, with just this monumental wiping off of market cap. Of course, we know that at the same time, this has just been the biggest market winner in terms of driving this broader rally that we've seen. But really now the bubble is looking like it's, if not burst, at least being threatened by that $589 billion DeepSeek rout is the largest in market history, with 17% plunge on Monday there. So these ongoing concerns rippling through the market. We have seen some winners, though, in terms of businesses that have said that they would incorporate DeepSeek's technology into their business models there. So Aurora Mobile, for example, MicroCloud, they're holographic, I should say, seeing quite a gain. Aurora, they're up by over 140%. Let's bring in our Bloomberg Opinion columnist Catherine Thornberg, who says that DeepSeek is a case of China showing that scarcity can fuel innovation, and she joins us now. And Catherine, I was chuckling at the fact that you wrote about this more than 6 months ago, and now it's sort of garnering global attention. And you thought even the previous model was pretty impressive. So what is it about this that, perhaps Silicon Valley has now found a bit of a blind spot, and what can they learn?
Right. So good morning, Heidi. So I think DeepSeek and its most recent model specifically has really shocked Silicon Valley. And I think that this is actually a healthy wake-up call. As you mentioned, I have been keeping my eye on this for months, and I wrote about this more than 6 months ago, saying, some of these U.S. chip curbs that we've been imposing on China and some of the scarcity that it's been forcing can actually fuel creative innovation. And I think U.S. tech leaders right now, this should really be a wake-up call for them, because for so long they've been saying they need more money, more resources, billions, even trillions of dollars to support their AI ambitions. And China has just shown that maybe it doesn't have to come with such a high price tag. And at the same time, Silicon Valley hasn't always done a good job of, showing investors that, this huge amount of money that they're putting into AI will pay off and will be able to make money. And they haven't always shown the public that it's, has sort of a broader utility. So I think that this is sort of a healthy wake-up call for Silicon Valley and for the U.S. tech industry, that maybe all of these astronomical sums of money, could end up looking a little bit wasteful.
We're sort of waiting for President Trump to weigh into this. What does it mean for the Stargate project?
So I think it's interesting because, the Stargate announcement last week that was up to $500 billion into building AI infrastructure in the U.S., this week that just sounds almost insane to spend that amount of money when you can maybe do it on the cheap, as China has been showing. So I think that, it's not even immediately clear if the Stargate backers will be able to raise that amount of money. That's sort of divided tech leaders, too. But I think now should really be the time where the U.S. should be able to show that they can still innovate and they can still, maintain the lead in AI without spending, basically a blank check amount of money to get there.
We're hearing President Trump speaking from a retreat in Florida at the moment. He has sort of spoken a little bit more about the tariff threat, putting tariffs on people who mean the US harm. Tariffs when it comes to semiconductors is something that he's mentioned. Now, the only way to get out of tariffs is building plants in the US, amongst some of these other comments on other industries that may be subject to tariffs as well. What is the sort of broader expectation when it comes to how chip makers and the broader sort of AI and tech space will be impacted if the competitive landscape changes through trade tensions and tariffs?
So I think it's really hard to predict at this point, how tariffs will play into this and what Washington will do to respond to the DeepSeek news. But I think what the U.S. should really be focusing on right now is, how can it sort of innovate with less money? And, how has China been able to do this even without access to cutting edge chips? And what can we learn from that? And, we've seen a number of Silicon Valley firms over the past weekend, sort of enter panic mode and try to sort of see what they can learn from DeepSeek and see how DeepSeek has, come up with these sort of innovations. And I think that focusing on that and really getting back to the fundamentals would be a wise move for these tech leaders right now.
Bloomberg Opinion columnist Catherine Thornbeck there. And we are continuing to hear from President Trump. He's speaking from Doral, Florida, where he's attending a House GOP retreat and really speaking at length when it comes to, at least intentions, when it comes to global trade tariffs. President Trump saying they'll be placing tariffs on steel, aluminium and copper. They'll also be looking at tariffs on pharmaceuticals and other industries that might be applicable for further tariffs as well. He said the only way to get out of tariffs is by building plants in the United States. He will be soon putting tariffs on semiconductors and foreign computer chips. So, more ahead on the Asia trade. This is Bloomberg. We do have President Trump speaking in Florida at the moment, saying that they'll be placing tariffs on steel, aluminium and copper. And of course, this is really in line with similar moves that we saw during the first Trump administration, where he, of course, back in 2018 announced his intention to impose that 25% tariff on steel, 10% on tariff on aluminium imports. And we are seeing that in kind being repeated now. President Trump saying that they'll be placing tariffs on steel, aluminium and copper, as well as looking at tariffs to be placed on semiconductors, on foreign computer chips, as well as industries including pharmaceuticals and other industries as well. More ahead on the Asia trade. This is Bloomberg. We are continuing to hear from President Trump speaking at the House GOP retreat from Doral, Florida. He's now commented when it comes to DeepSeek, saying that the release of DeepSeek AI should be seen as a wake-up call. And of course, this over the past couple of days, we have seen quite a wake-up call when it comes to the markets, when it comes to stocks, including, of course, very vividly the sell-off that we've seen in Nvidia. But of course, we have been waiting for President Donald Trump to make his comments after the Chinese AI startup DeepSeek sparked a lot of questions about the sustainability of the valuation of big US tech, some of the chip makers, the US's competitive edge in a space that is a top priority for the Trump administration. So we'll be listening for sort of further commentary from President Trump in terms of his views and potentially what he might do about this as well, because of course so much of his second term campaign promise has been to make America the world capital in AI, including an executive order that called for the creation president of an interagency group to advise on policy requirements for AI developers. So we'll continue to see what we hear from President Trump as he's speaking now. Well, Australia's superannuation industry has been widely celebrated for building a $2.5 trillion nest egg for the country's workers. It has been less successful in helping those savers manage their cash once they retire. Australian pensions reporter Amy Bainbridge joins us now for more. So this is, of course, an industry that's all about preparing for retirement. So what are we seeing here?
Well, it's interesting, Heidi. I mean, I've been to multiple conferences in the last 6 months where there are session after session dominated by the discussion of how better to serve people as they reach the retirement phase of their journey, and a lot of the ideas are coming out of the woodwork now. We've had the Grattan Institute last week suggest that there should be compulsory annuities for people heading into retirement, but already, of course, those kinds of products are offered in the marketplace. This is all because there are some 2.5 million people expected to retire in the next decade, and that means that the industry has to get really good at moving from being an accumulation vehicle, so where people park their savings until they retire, to working out what the best way is to encourage people to spend that money once they hit retirement. We have survey after survey show that people are very anxious about running out of money, and so of course there are a lot of ideas coming to the fore now about how to fix that issue in what has been a globally celebrated system. It must be said, we regularly rank among the top retirement systems in the world and certainly do well among our peers, Heidi.
Thematically, what's the sort of big focus for pension funds? You know, the top story, almost the only story today, has been on Nvidia and the heavy investment that we've also seen from some of these funds into the AI story.
Absolutely. So if we looked at the returns from 2024, 11.5%. For the superannuation industry more broadly, that's when you look at the balanced investment option where most people have their savings. That has been largely because a lot of the funds have done extremely well through that and the like. And now I guess we'll be looking to see what is next. A lot of the funds have said that they are looking at the AI revolution and what its impact will be more broadly. So looking beyond the top 7 companies, looking at companies that will benefit from efficiency. So they might be smaller or mid-sized stocks, for example. We spoke to funds that are already putting money into those kinds of stocks. But also a big focus for 2024, of course, for 2025 rather, investing in an uncertain environment is looking at private markets again. So where are the next returns going to be? We know that around half of our assets are invested overseas. Around about 20% is in private markets, and a lot of the super funds, the biggest funds, are looking at adding to their private markets exposure, particularly private equity and private credit. So that is going to be a really big focus this year as well, Heidi.
Australian pensions reporter Amy Bainbridge. And let's bring in now from Melbourne is Paul Schroder, who's the CEO of AustralianSuper. This is the country's biggest pension fund. Paul, really great to have you with us. And I think, you know, picking up from where Amy left off, talking about, I guess, broadly the two types of disruption that we continue to see. One is obviously political through policy, and the other, as we've seen over the past couple of days, is the emergence of disruptive new tech, even within this sort of AI space. How do you kind of contend with this all in terms of the management of funds at AustralianSuper?
Yeah, well, hello, and thanks for having me. Well, the primary purpose for the fund is to make members the most money we can for their retirement. So we need to be able to work our way through all of that noise and to thoughtfully and in a very considered way make judgments about what's likely to create long-term value for members so they can retire richer in retirement than they would have.
And of course, Nvidia has been one of the stocks and the stories that AustralianSuper has been really focused in investing in. You would have made a lot of money for your members up to this point. What do you make of the sell-off now?
Yeah, there's no doubt that tech stocks have been a powerful driver of returns for members, and it's true that American exceptionalism and tech come together very well to be a source of income for retirees and to build people's balances in retirement. But what we've seen overnight in recent days is what we think is most likely a mid-cycle efficiency gain. That is, somebody's come along and said we can do that much more cheaply. And I was very interested in President Trump's remarks that it's a wake-up call. But we welcome competition. We welcome efficiency. We think there's tremendous opportunity in investing in technology, because technology will underpin, and AI in particular will have really material impacts on people's lives. So if something's valuable and people are prepared to pay for it, then you can make money out of investing in it.
Does this, coupled with political uncertainty within the US, does it change the nature of the US exceptionalism investment story for you?
America is an incredible place to invest. We've got a wonderful office there with 60 people that we intend to double. The worst thing anybody could have done in the last century is bet against the US. There's no reason to bet against it now. So it's a great place to invest. They understand markets. They welcome investors. We're the 16th largest fund in the world, fastest growing amongst the top 20. We're fully and utterly committed to the US economy and its future success, and we'll very thoughtfully invest, because investing is always about the future. You can't look backwards, you've got to look to the future, and there's a great deal going for the US economy, and that's why we've created an office there in New York. It's why we've invested the bulk of our global equities in the US. I mean, it's a tremendous success story, and it's not hurt by having other smart competitors come along and get everybody to sharpen up their games.
Where else do you think the most attractive investment opportunities are this year?
Well, we're very interested, global expansion is very important for us because Australia represents only 2% of global equities. So globally is very important. Private markets play a very important role, and of course, private markets have been a little bit out of vogue with interest rates where they are, but there's great opportunities, tremendous opportunities in private equity coming, we think. The fund's going to triple in size. We'll probably double our exposure to private equity over that time, and provided that we can co-invest and co-underwrite and invest in funds with tremendous GPs, then we think we can make members a great deal of money over the long term. You see, what we're driven by is a simple idea that a cleaner in Brisbane should be able to invest like a trillionaire in New York, and US is a great place to invest.
Amongst some of the other things that get impacted by the return of Donald Trump to the White House are DEI commitments and climate commitments, and we've seen some of that already. You have a 2050 net zero commitment, for example. Does that changing landscape change those commitments that AustralianSuper has in terms of how you invest?
Well, it doesn't really affect the way we invest, because we've always and only pursued long-term value. So we think about investing risks very thoughtfully through that lens. So we don't get too caught up in fashions, and we don't get too caught up in the politics of it. We just think about this. Is the world going to move to net zero? Yes, it will. And that consensus means that will be where to make money. On the DEI front, it's very difficult to be in Australia and have any views about other countries' jurisdictions. But we know that more diverse boards and more diverse workplaces produce more money by being more productive. So we accept that there's been a political resolution and there's a new administration, and it will make its decisions about these things. But from our point of view, it's always and only through an investing lens. Do you make more money from having diverse, more inclusive workforces? Yes, you do. Will we need to reduce emissions over time? Yes, of course we will, for the future of the planet and for the ability for all markets to be successful. So we understand that there's differences of opinion about the way things roll out. We understand that it's from time to time politically contentious, but we've only and always seen through the lens of making money for members, and those things are very important to consider when you're thinking about the sustainability of earnings.
You sound very bullish on growth, as we've heard already. And I do wonder, how big do you expect the fund to get, and how sort of strong is that growth momentum, and how does that play into your hiring, for example, in terms of how much you're going to add to headcount in some of those key offices around the world?
Yeah. So the fund expects to be 3 times its size in 10 years' time, because people are joining the fund and they're bringing their money to the fund and they're contributing more to the fund. So and size and scale is really important. Size and scale and skill to be able to deliver for that cleaner in Brisbane. So we are bullish about growth, but only if it means we can earn more money and cost less money. But in the case of New York, we'll double our office in New York at least, and we potentially could double or triple our office in London, and we've already got a strong office there in Beijing. So global is certain. Our size, provided we continue to do a good job, will continue. And so we will be employing high calibre, high performance, high trust financial market experts in New York and London at reasonable numbers over the next 5 to 10 years.
It is an election year in Australia. We've talked a little bit about the retirement anxiety affecting this next wave of baby boomers who are retiring, and I suspect perhaps even more anxiety for the generations to come. I do wonder, do you have a wish list in terms of policy hopes and expectations of what would make that period of sort of preparedness a little bit easier?
What we like the most is policy stability and policy certainty. So the more the parties can be aligned about the importance of productivity and sustainable growth, the better. The clearer the parties can be about the pathway to net zero, the better. And especially these big infrastructure and build processes, the more investors can see certainty and confidence for the long term, the better.
Paul, really great to have you with us. We appreciate your time. Paul Schroder, who's the CEO of AustralianSuper. Australian politics and economic policy continue to be focused in the next hour. We look ahead to this year's federal election. Independent MP Allegra Spender joins us for Australia Ahead. That's at 11:40 a.m. Sydney time, 8:40 if you're watching in Hong Kong. Much more ahead here in the Asia Trade. This is Bloomberg. Take a look at commodities, in particular the little bit of downside we continue to see in crude trading at the moment. We did slump by about 2% in the opening session for the week. Really the focus remains on President Donald Trump's potential use and threat of tariffs and that threat of the roiling of global trade and growth momentum. We have been hearing from President Trump this morning, speaking from that House GOP retreat in Doral, Florida, saying that the US will soon be putting tariffs on foreign produced goods, including steel, aluminium, copper produced overseas, as well as semiconductor chips and pharmaceuticals as well. Let's take a look at some of the other stories we're following this hour. And Bloomberg sources say Israeli Prime Minister Benjamin Netanyahu is planning to visit Washington next week to meet with President Trump. Israeli media are saying that Trump's Middle East envoy, Steve Witkoff, is expected in Israel before that to discuss longer-term solutions to regional conflicts. Meanwhile, the EU has agreed to reactivate its border assistance mission at the Rafah crossing between Gaza and Egypt. China and India have agreed to resume direct flights and facilitate visas in a bid to rebuild diplomatic ties. The decisions come after India's top diplomat, Vikram Misri, met with Chinese Foreign Minister Wang Yi in Beijing. The two countries will also restart sharing data on trans-border rivers. Well, impeached South Korean President Yoon Suk-yeol remains in detention, facing insurrection charges. Meanwhile, the country's unemployment rate jumped in December. GDP barely rose in the final quarter of 2024. Let's bring out Bloomberg Opinion columnist Daniel Moss, who thinks that South Korea's economy is a victim of the country's political impasse. And Dan joins us now. And it has been the political saga just becoming an ongoing drag, right? Are we starting to see that in terms of the economic data, or at least worsening the slowdown that we're seeing already?
Well, Heidi, there are other things going on, but one thing that's clear is if you cast your mind back 6 weeks, the Bank of Korea governor, hours after martial law was imposed and rescinded, came on Bloomberg television and told our colleague Haslinda there was a very clear distinction between any short-term financial disruption and medium to long-term economic scarring from what's transpired in the nation's politics. Well, here we are, and it's beginning to show up in the economic data. The thing that I found really quite shocking was that December employment report. I thought that might have tipped the BOK's hand in their January meeting. Didn't happen, but oh well, just wait till next month. You know, Heidi, this is really the year where Korea could have brought a lot of things home, but it's the one that just got away from them.
There's also been, of course, other impacts seen from the Jeju air disaster, for example. We know that the economy tends to be very badly affected in times of national tragedy. What about the level of resilience that we see?
Well, the resilience is always there. You know, as disappointing as those fourth quarter GDP numbers were, the economy still technically grew, though not many South Koreans would say they feel it. Avoided a contraction, but only just. This political saga has continued into the first month of the year. Let's start seeing what some of those January numbers look like. You know, I'll be the first to admit, this time last year, Korea was looking pretty good, had a lot of things going for it. Its semiconductor companies were powering the AI revolution. Exports were strong. Blockbuster first quarter GDP number. And I thought, this is a boom that's not getting a lot of respect. Well, the political class is not giving the economy much respect now.
Our Bloomberg Opinion columnist Daniel Moss there. We do have more ahead on the Asia trade. This is Bloomberg. We do have some breaking news when it comes to price data out of Japan at the moment. We are seeing December services producer prices rising 2.9% year on year. That was a little bit weaker than estimates of 3.2%. And of course, this comes as we've seen the BOJ hike and that outperformance of the yen against G10 peers, and just the sort of presumption of more hawkish hikes ahead, given the hawkish signals that we heard from Governor Ueda there as well. So in terms of this lot of data, certainly perhaps the services PPI numbers are a little bit softer than expected. Expectations were for 3.2%. Also a little bit of weakening, but not really on the margins when it comes to the previous reading of 3% in November. Well, shares of SoFi Technologies sank after the fintech lender's profit forecast missed expectations. The CEO, Anthony Noto, joined us to discuss SoFi's earnings results, their plans for more investment to drive growth.
Two things. One, 2024, we took a pretty conservative approach to the year in terms of our growth and our profitability. We really wanted to make sure that we were able to drive strong profitability in 24 to achieve GAAP profitability, to ensure we reinforced our balance sheet and a capital cushion, and we did just that. Prior to 2024, we had committed to a balanced approach to growth and profitability, where we would reinvest 70 cents of every incremental revenue dollar, and we call that 30% incremental EBITDA margins. So we took our revenue forecast for 25 up. We're in the best position we've been since I've been here at SoFi for the last 7 years. We're calling for 25% revenue growth, strong margins at 26%, just not an expansion in the margins, because we want to invest in the massive opportunity that still sits in front of us. And so we took revenue guidance up, and it's about 10% higher than the street, but that will require more investment, and it will help us ensure we have growth beyond 25. And we also took our revenue guidance for 2023 to 2026 on a compound annual growth rate basis higher as well. So the profitability of the business is there. We could drive more to the bottom line, but we think that's not the prudent thing to do, because we just see massive growth in front of us, and the ability for us to keep driving member growth and product growth of more than 30%, which we've done, and revenue growth of more than 25% is, you know, what we're calling for through 2026.
Anthony, of the investment that you just described, what portion of it will you be putting toward artificial intelligence? It's the topic at the top of everybody's minds, and people are watching how companies are deploying it. Do you see, for instance, an agent-driven service perhaps at SoFi at some point?
The vast majority of our investment going into 2025 and 26 will be in building unaided brand awareness, becoming a trusted household brand name. We have great products. The reason why we're driving such strong product and member growth is because the products are very differentiated. And when we make people aware of them and they use the products, they not just use the first one and they gain trust with us, they use the second and third one. 30% of our product growth in the quarter of 34% was from our existing members. About 40% of our members take out a second product within 30 days. So we'll continue to invest in differentiating the product. SoFi Money is a great product that has a high APY. You can do person-to-person payments. You could do Zelle, auto bill pay, 2-day early paycheck. And so we'll be investing in that. We'll be investing in our Invest product to expand the selection for Invest, in addition to other product categories like insurance and credit card and small, medium business lending.
SoFi CEO Anthony Noto there speaking with our colleague Michael Shepherd. The latest from the corporate front now, and Estee Lauder is said to be reviewing its portfolio of brands, which include Clinique, Smashbox, Tom Ford and Aveda. Sources say the cosmetics giant is working with Evercore on the review, which could lead to the sale of some of its brands. Estee Lauder has been losing market share to more nimble rivals, while demand from China has been slow to rebound. China Vanke's chairman and CEO are stepping down after the developer warned of a record $6.2 billion loss for 2024. Chairman Yu Liang will be replaced by Xin Jie, who's a current chairman of Shenzhen Metro, which is Vanke's largest shareholder. Meanwhile, the CEO, Zhu Jiusheng, cited health reasons for his departure. Vanke is facing a wall of debt repayments, even as home sales continue to struggle in China. Coming up in the next hour of the Asia Trade, asset manager DWS telling us why they favour banking stocks in Japan as we take a look at how chip-related stocks react. Chinese AI startup DeepSeek disrupting the market. We'll be getting analysis with DGA Albright Stonebridge Group's Paul Triolo. The market open in Tokyo is next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as we brace for volatility. Heidi, of course, we have seen that wipeout of tech stocks in the U.S. and Europe amounting to about $1 trillion in concerns about cheaper AI models coming from China. But of course, we have more news over tariffs coming from the Trump administration.
Always more news from the Trump administration. That's right, Shery. We've been listening to, of course, President Trump speaking out of Florida, saying that he's going to be imminently putting tariffs on everything from steel to aluminium to copper, much like his last administration, of course, but also on foreign-made computer chips, semiconductor chips as well, right? And it was interesting. He also had something to say about, what was going on when it comes to the progress being made in Chinese AI, which, of course, is the theme that we're watching when it comes to the Japan Open.
And it's so interesting how much attention has been put into these Chinese startups, right? Especially on a week, I guess, where we are contending with valuations from U.S. tech companies as we get big tech earnings season underway this week. But take a look at how Japan is coming online, because we had already seen that downside pressure when it came to tech stocks. The Nikkei down 0.4% as the Japanese yen is weakening slightly. But we had haven demand overnight. So we had seen the Japanese yen jump by the most in about 5 weeks. We're now at the highest level in about 5 weeks against the U.S. dollar. We're also watching, of course, the BOJ tightening moves, not to mention that we are still digesting perhaps those services PPI numbers that came just a few minutes ago, surprising to the downside. But the big story today is really going to be about tech. Take a look at these tech names across Japan. Of course, we're watching SoftBank. They had rallied significantly last week already on those investments for U.S. AI infrastructure, amounting to what they said would be $100 billion and then to $500 billion eventually. We saw that pressure on all of these stocks in the previous session, given the concerns about the fact that perhaps China is much farther ahead when it comes to catching up in this AI age. And what that means, Heidi, of course, not only for these companies, tech companies, but just hardware companies, is still a big unknown.
Yeah, and it's quite interesting, Shery, just gleaning from the comments that we had from President Trump over the last sort of hour or so on the rapid rise of DeepSeek. He says that it should serve as a wake-up call for American industries, and in addition that he'll soon be placing tariffs when it comes to foreign-produced semiconductor chips, pharmaceuticals, steel, aluminium, etc.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
Let's bring in Bloomberg's AI reporter Rachel Metz for more. And Rachel, was interesting. President Trump said, yes, it should be a wake-up call for Silicon Valley, but also that he viewed this as a positive asset in terms of, well, if it's cheaper, then that's a good thing if you have to spend less money, right? So does this give us an indication of, sort of how this sets up the administration's views? Because we know that leadership in American AI, global leadership, I should say, is something that's very important to President Trump.
Yeah, I mean, I think it gives some insights into what Trump is thinking. I think it also is important to keep in mind that in the AI industry, there are a number of people and companies and researchers that have long been working to make these models not just more powerful, but also more affordable, more efficient. And as DeepSeek is doing, I think it puts more of a focus on this. Can we make AI that is less energy hungry, less compute hungry, less chip hungry? And maybe we can use those resources for other things. Doesn't mean we're not going to use those resources, but maybe they could be focused more on deploying the AI, for instance.
Why is there such a big focus on DeepSeek this week? I mean, this has been out for a while. It's been months that people have been watching this stock. So why all of a sudden this enormous attention on this one company? Is it just a broader significance of where this geopolitical tech rivalry could go?
Well, this company, I mean, this model from this company is very new, and they're doing in an open source manner what only the top tier companies in the US are charging people for right now. So if you can do this for much cheaper, and they also put their model together with less money, they put it together quickly, it works efficiently. So if you can do all those things, you could see how that would make a lot of other companies say, hey, wait, maybe we could do this more cheaply, more efficiently, more quickly. I think it's really just getting a lot of people thinking about what's going to come next in AI.
So what does that mean for all of these supply chain companies that are related to DeepSeek? Because we have seen, of course, an enormous rally around Nvidia stocks, around anything related to OpenAI. If we have the same sort of parallel development in a Chinese company, what are the global implications business-wise for these companies?
I think we're still going to need all of these things. It's just not clear if we will need them in exactly the same ways. I think what we're seeing from DeepSeek in particular is that there isn't just one way to build a cutting-edge AI model. There are many ways to do it, and it doesn't necessarily have to be extremely expensive or compute intensive. Doesn't mean we won't be using those things, but maybe we'll be using them differently. So they'll still certainly be needed. It just might, things might change a little bit. And I think we see that as every technology matures, right? We see that with smartphones. We've seen that with the chip industry in general. Things tend to get more efficient and a little bit different over time as they progress. That's not necessarily a bad thing. It could actually be a really good thing.
Bloomberg's AI reporter Rachel Metz there. Let's get a little bit more on the market reaction to all of these developments around that Chinese startup DeepSeek, and bring in DWS Chief Investment Officer APAC Ivy. Ivy, so how are you digesting this news when it comes to AI development carried out by China, that it can be cheaper, more energy efficient? Does this mean that we have perhaps seen the peak already for the NASDAQ?
It's actually a very interesting development. It's very impressive what DeepSeek managed to do in such a cost-efficient way. But I guess in the short period of time, what we have seen yesterday in the market, there is some sort of a oversell situation in some of the supply chain related stock in the data center. But for the next few days, I think market will probably put a focus for all these U.S. tech company without earning, particularly on the capex planning in the future. And like the next part is like, what is the U.S. government going to do? But I think the key part is like, if AI can be deployed in a more like efficient way, it's going to benefit a lot of company, like for the consumer company. So the tech enabler probably will get more benefit. And for China, definitely like it's quite encouraging news like people are seeing. So it's a benefit quite a lot of like Chinese technology stock that we are seeing right now. I think it's an ongoing event. It's not going to stop right now. With all the technology advancement, it's going to be like keeping on the competitions.
How important is that big tech delivers solid earnings this week?
It's like for the earning part, I think it's pretty much within everyone's expectation. The earning will be solid. So it's not about the solid earning part. It's more about like the guideline, particularly regarding the capex. They will be the key focus the market putting on. And particular for the whole U.S. market, like in the past, when you look at the earning, pretty much driven by like the Magnificent Seven. So like can S&P continue to maintain the current multiple? It's also really like depend on the earning momentum that we are seeing on the Magnificent Seven. So that's very important for the whole market, particularly for the U.S. market.
How important is the DeepSeek story when it comes to adding some enthusiasm and injecting some momentum when it comes to Chinese equities?
I think that's definitely like a wake-up call, like for people who kind of like underway for the Chinese equity market, because we have been like more focusing on the tariff impact, the geopolitical tensions, and also particularly on the weak consumption market in the Chinese market. But like with DeepSeek, what's happening is actually like a wake-up call to a lot of investors that about like the tech company in China, the supply chain in China, and actually when everyone's talking about like the undersupply of data center, like keep building on data center, China was actually experienced like oversupply of data center. Part of the reason because like the restriction of like accessing to these advanced chips, right? So if it's to work out, like will it be more like a positive driver for the China data center? Like that will be also where people put a focusing on. Definitely like people right now do more research on that, like and thinking about maybe there's more potential benefit that we can get in China market.
When it comes to Japan, we're expecting strong results from the big banks in the coming weeks. In addition, of course, to expected better profitability on the Bank of Japan's policies. Does this make Japanese banks sort of a one-way bet for you?
We actually really like the Japanese like banking stock, particularly like the earning is solid, but the key focus we have been putting on is reducing the cost holding structure. That's actually improving, make the companies more efficient. And also for all these like capital initiative they have been doing, we think that it's more unlocking the value of it. And actually on top of Japan banking, South Korea banking is also where we are actually putting focus on.
When we're talking about banks, how much are you looking at perhaps improved efficiency, not only in banking because of artificial intelligence development, but just other broader sectors of the industries?
So far, like for the use case of it, we haven't really seen that it's really affecting the bottom line. But like going forward, probably with the use case of it, like a more technology usage, it will probably improve the cost base that we will see the impact of it.
All right, Ivan, DWS Chief Investment Officer for APAC. Good to have you with us. Of course, we continue to watch all of these tech stocks and perhaps the ripple effects that we might see from that global rout in the sector. We're now seeing SoftBank down almost 5%, as you can see right there. We are seeing Disco, Tokyo Electron, anything really chip-related. We are seeing that broad downside. SoftBank, of course, last week just announcing those investments in U.S. AI infrastructure, Heidi. But we're not seeing those gains that we saw last week being sustained today.
And it is just on that one story, right, when it comes to big tech and DeepSeek, the Chinese AI startup Shery really having an impact in more than just the ways that we've seen across equity markets. On geopolitics, the tech arms race of the US as well. We heard from President Trump earlier saying that this is a wake-up call for US AI. We'll be speaking to Paul Triolo next for his analysis from the DGA Albright Stonebridge Group partner there. This is Bloomberg.
for how some of those markets closed across Asia. Breathing a sigh of relief in a day like today, we have China away, Korea away, Indonesia. Well, Nikkei is trading at the moment, and you can see the worst day in about 2 weeks, being let down by those tech names. Anything chip-related really losing ground, with SoftBank now losing for a third session as well. All of this, of course, on concerns over Chinese startup DeepSeek and its cheaper, more energy-efficient AI model. Let's get more perspective on DeepSeek's sudden rise to global fame. And as you can see, market disruption. Joining us now is Paul Triolo, partner at DGA Albright Stonebridge Group. Paul, great to have you with us. So we know that DeepSeek and its latest AI model is really not necessarily anything new. A lot of people have been downloading it already from the app stores. Why is it now that we're seeing this huge impact on the markets and this reassessment that this could be a game changer when it comes to the AI race?
Great question, Shery. And I think I've been talking to people, for the last, of course, 3 or 4 days about this. I think it was sort of a perfect storm of things that came together here. So, yes, as you know, DeepSeek has been around for a while, not that long, and their earlier models, particularly their V3 model, got some attention. But what happened over the last couple of weeks is people started focusing on their reasoning model, and this reasoning model was really something that was directly comparable to ChatGPT's ChatGPT 4.01, which really brought sort of this reasoning chain of thought kind of capability to these models. And within only 2 months after the release of the ChatGPT reasoning model, DeepSeek had released this fairly robust model that compared favorably with some of the OpenAI models. And then people then also went back and sort of focused on how much it cost to train this model in a paper that was written by DeepSeek. And that the figure that was thrown out there, $6 million, was really just the cost of one training run. And DeepSeek was careful to say that the overall cost was much higher than this, right? All the research that went into this and some of the previous training of the model. So people jumped on that number of 6 million and said, hey, well, they've been able to train a model more cheaply than some of the big players like OpenAI and Anthropic and Meta. And then they also released this open source, which is a big deal too, right? Because they're really sort of in some sense then competing with Meta. But I think a lot of the furor sort of misses one of the underlying points, which is that this is a very small company, very capable company, but they're not really they're not really trying to compete with the big players like OpenAI and Meta. They're really focusing. The company itself says they're sort of focusing on developing advanced artificial intelligence, but they're not really a company that's out there trying to compete directly with the big U.S. players. So in that sense, I think it was an overreaction
I guess,
to the release of this model.
But is it an overreaction, Paul, then, if you think about the fact that it might not just be about the company itself, it's just what it tells you about the progress that China is making, despite, of course, the fact that we know that Washington has been trying to put those export controls on advanced technology so they could rein in their ambitions.
Right. Well, that's another angle to the story, which has many angles, as we see here. So yes, so the company claimed to have trained this foundation model, which was pretty capable, the V3, on only something like 2,000 Nvidia, in this case H800 GPUs, which were export controlled versions and sort of downgraded by Nvidia to be able to sell to China. Now, one of the fascinating things was DeepSeek was able to use clever sort of low language programming of the hardware to overcome the restrictions and the downgrading of those GPUs, the capabilities, and to sort of improve those capabilities to the point where they were probably performing at the level of some of the more advanced and uncontrolled GPUs that Nvidia has produced. So yeah, so it was a very clever engineering feat for DeepSeek to figure out ways, low-level programming, to make their model be able to be trained more efficiently and more cheaply. And that also carries over to things like inferencing, which is really what people now are focusing on, and which sort of is what also freaked the market out, because a lot of these big-ticket infrastructure deals, like the Stargate with OpenAI and Meta and Google announcing big plans to invest in data centers, most of that is about inference. That means when you're running the app on your phone or you're querying a ChatGPT application on your desktop, that's not training, that's inference, and that's using up a lot of computing power. So to the extent you can make that more efficient, it's a good thing. So in the long run, people think that this is actually a good thing for the industry, because having more efficiency in those models is important, because that will actually cut down on the costs of inference and on the cost of the power that's needed to generate them. So again, you saw the whole supply chain get hit today, even the energy companies. But I think again it was an overreaction, because you still need to deploy AI on a large scale. You still need those data centers that are going to be running inference. And in some sense, this is a good news thing, because that inference will be able to be done more cheaply. But people were freaked out about the sense that the companies were spending a lot of money on CapEx, and the returns were still not clear fully, right? Because of the business models that each of these companies has.
The efficiency and cost gains have been acknowledged from President Trump and also by Nvidia, right? That part seems to be fairly uncontroversial. Shery mentioned, does this sort of show the limitations of US curbs, particularly as they view Chinese AI development as a national security risk? What do you think we could see from the Trump administration, given that he's made it very clear that US AI supremacy is a top goal?
That's a great question, and I think this doesn't mean at all that the export controls aren't working. The export controls specifically on GPUs. So when I talk to folks who know DeepSeek pretty well, the company would love to have more advanced GPUs in larger numbers, so it could train bigger and more capable models. So the export controls have worked, but the export controls have forced the Chinese companies like DeepSeek to become more innovative in the way they design their models and interact with the hardware. So the problem is, though, that now the interesting part of this really is that by open sourcing this model is now everywhere. I have it on my phone. I'm going to install it on my laptop. Researchers are installing it all over the world. People are downloading the app on their phone. And so this now creates a really interesting national security issue, which is the U.S. government has just essentially not ordered, but because of a law on TikTok, Google and Apple have taken TikTok out of their stores. Now that the user data for TikTok is stored in Texas, and now on those same app stores, people are downloading a Chinese AI app, and the data that they're putting into that app is being stored in China. So you have a very interesting situation here from a national security point of view, and there's no easy solution to this. There aren't export controls that can be readily drawn out here, for example, and applied to this problem, because this is a service, a software service, and export controls really aren't designed very well to deal with this kind of a situation. And so, the administration could presumably order Apple and Google to stop carrying the DeepSeek app on their stores, but it's not clear what the justification for that would be. And then also, people are not just on their phones, but researchers are using who leverage open source models are downloading and using this because it's a very capable model. And so it's sort of ironic now. It's spread a lot there's a lot more Chinese AI models now in the U.S. Just because of the success of this company. And so it presents a really knotty national security problem in terms of what tools the administration can bring to bear to try to and how they justify this, because they focus so much on the GPUs and controlling the advanced compute going to China.
Does the progress that DeepSeek has made to this point risk plateauing? Because as of the end of 2023, they can no longer buy the Nvidia chips that they need to continue trailing and scaling up?
That's a great question. So look, they obviously have this cluster of H800s that they've been using for training. Now, there are the degree to which that can be extended to train, bigger models, like they're probably going to have an R2 and R3. They can probably do some of that on that model, but on that GPU cluster. The big question is, can they obtain GPUs domestically? Because the company appears to want to be compliant with U.S. export control laws. And so the question is now, can they run their new models on domestic hardware? And that would have to be from Huawei. As we know, Huawei has been hit with U.S. sanctions, but Huawei has been able to manufacture some advanced GPUs. This is the Ascend 910B and C. And there's evidence that DeepSeek is probably already testing its model or potentially running aspects of its model and some of the training on Huawei GPUs. But again, the question there is, can Huawei scale up because they're working with domestic foundry leader SMIC to manufacture these, and it's very complicated because this is a very advanced design, and SMIC is, for example, pushing its tools to the limit, its existing tools, to try to produce more advanced GPUs. So there's still a big question mark. Can the combination of Huawei and SMIC produce enough GPUs that companies like DeepSeek could then use to develop large clusters for advanced training? And so the jury's still out on that. It's not clear to me right now that can happen in the short term. But certainly companies like DeepSeek and other Chinese AI companies like ByteDance and others are all looking for domestic sources of GPUs because they've been cut off from those most advanced chips from Nvidia because of U.S. export controls. So it's possible, yes, but it might take some time for them to establish a reliable supply chain for domestic GPUs and then sort of scale up those efforts. Those things take time. You can't put in place a 50,000 GPU cluster overnight, right? It takes quite a bit of effort, and it takes power and energy and all the supporting infrastructure. So it's certainly possible, but we don't really know. We don't really know how quickly they can do that. But certainly they've been able to use their existing legal, arguably, cluster of H800s to do some really amazing things with that model.
We'll have to see if that scarcity continues to fuel further innovation, right? Paul, really great to have you with us, and we appreciate your insights. Paul Triolo, who's a partner at DGA Albright Stonebridge Group, they're joining us. What next for DeepSeek? More ahead on the Asia Trade. This is Bloomberg. Take a look at how oil is faring at the moment, stabilising more or less. We've seen that 2% drop on Monday, of course. This ongoing sort of universal tariff threat being reiterated by President Trump continuing to weigh across the industrial commodity complex there. He's recently, this morning, threatening more tariffs on steel, aluminium and copper. Let's take a look at how the market continues. We do have NAB business confidence and conditions data just crossing the Bloomberg for the month of December. We're seeing a contraction of 2 points when it comes to business confidence and a gain of 6 when it comes to business conditions. So that measures job sales profitability. That actually advanced in December, largely being driven by retail. Consumer spending picked up as well. Some of those price pressures also eased as well. So conditions climbing by 3 points to 6, reversing declines in the prior month and almost returning to that long run average there, including that notably uplift from retail, which went back into positive territory for the first time since November 2023. So that is sort of a good sign, given that we have seen, of course, quite a difficult impact when it comes to household spending, retail sales and broader retail sentiment as interest rates set by the RBA remain still elevated at that 13-year high. The Aussie dollar not seeing too much of a move at the moment, holding at about 62 cents, Shery.
Yes, we continue to see volatility in the currency space. Of course, we have seen a little bit of a rebound in the U.S. dollar as well. A lot of safe haven moves. The Japanese yen also seeing the highest level in 5 weeks in the overnight session, that big jump. We do have Korea away on holidays today, but you can see the market session today with the Nikkei losing more than 1.5%. And of course, tech, the big laggard, and a lot to do with these concerns about valuations in tech stocks. Take a look at Advantest, for example, is one stock here in Japan that's falling by the most since August 5th. Remember, that's the time when we had that sell-off after the July rate hike by the Bank of Japan. This, of course, on concerns around Chinese startup DeepSeek that has upended markets. Its cost-efficient AI model is now likened to that of OpenAI in terms of capabilities. Bloomberg Opinion columnist Catherine Thorbeck now says that China has shown that scarcity can fuel innovation. She joins us now with the latest. And Catherine, this stock and the attention that it got in the last few days, you actually wrote about this in the summer of last year. Why the focus now, and what should Silicon Valley learn from this?
Right, Shery. So as you mentioned, I've had my eye on DeepSeek for a while, and I've been arguing that, some of these U.S. efforts to hold China back in the AI race could backfire. We've seen over and over again historically how scarcity has actually fueled innovation. And I think that DeepSeek now, and the reason it's getting so much attention now is because of its most recent model, which came out last week. But I think this should be a really healthy reality check for Silicon Valley. U.S. tech giants and tech leaders have just been saying that they need millions, billions, even trillions of dollars to pursue their AI ambitions. And DeepSeek just came around and showed that maybe those costs don't have to be so astronomically high, and maybe there's a way to do it cheaper. And I honestly think that innovation is a little bit more impressive to, investors and to the public.
We heard $100 billion, eventually $500 billion when it came to that Stargate AI infrastructure build-out in the U.S. So what does this mean for this whole project?
Right. So I think Stargate sort of exposes a lot of the AI sector's wrongs right now. This Trump's announcement last week that he would spend up to $500 billion to build out AI infrastructure. And, that might have sounded really catchy last week and really shown, U.S. Staying ahead of the curve. But this week, in the wake of all the DeepSeek news, that almost sounds wasteful, and that almost sounds like it could breed sort of excess. And I think where U.S. tech giants and U.S. tech companies should be focused on right now is showing that they can be efficient and showing that they can, actually bring utility and bring return on investments to investors.
Given all of this, how do you say we should judge the success of Stargate?
So I'll really be looking at if Stargate follows through on its promise to bring 100,000 jobs. It's not really clear if they're going to be able to raise $100 billion or $500 billion. But I think that, really keeping an eye on the jobs figure and keeping an eye on how many, livelihoods are impacted by Stargate would really be a way to sort of keep the human impact of the AI boom top of mind for tech leaders and for policymakers.
It was interesting. We did hear the response from President Trump, right, saying that, look, cost efficiencies, energy efficiency is obviously a good thing, but saying that this is a wake-up call for US AI. What could this potentially mean, you think, in terms of deepening the geopolitical divide when it comes to this AI race?
So I think now's a good time for Washington to really, take stock of what they've done so far, how that's played out, what some of the unintended consequences have been, how have they actually forced China to be creative in its innovations here, and what should they do next? And I think they should be really cautious and really smart about their next move and not rush into any sort of knee-jerk reactions here. And I do think Trump is right. This is sort of a wake-up call for Silicon Valley. And I think, we've seen a number of U.S. tech giants in panic mode over the weekend. And I think some of that is healthy. Some of that sort of can help sort of bring U.S. tech companies back to focusing on the fundamentals here.
Bloomberg Opinion columnist Catherine Thornback there. Let's take a look at some of the other stories that we're following from around the world this hour. And Scott Bessent has been confirmed as the next U.S. Treasury Secretary, winning a Senate vote 68-29, including support from 15 Democrats. The former hedge fund manager's policy objectives include 3% GDP growth and a 3 million barrel per day increase in US oil production. The FT is reporting today that Bessent backs President Trump's plans for universal tariffs starting at 2.5% and moving gradually higher. And President Trump is preparing an executive order for a next-generation defense shield to protect the US against ballistic missiles and other long-range attacks. The order will commission a system similar to Israel's so-called Iron Dome. The White House says attack by ballistic, cruise and hypersonic missiles is a catastrophic threat facing the US. Bloomberg sources say Israeli Prime Minister Benjamin Netanyahu is planning to visit Washington next week to meet with President Trump. And Israeli media say Trump's Middle East envoy, Steve Witkoff, is expected in Israel before that to discuss longer-term solutions to regional conflicts. Meanwhile, the EU has agreed to reactivate its border assistance mission at the Rafah crossing between Gaza and Egypt.
China Vanke has reported a shakeup of its top leadership, with both its chairman and CEO stepping down as the developer warns of a $6.2 billion loss. Bloomberg's China credit reporter Loretta Chen joins us now for more on this. What is the significance of this shakeup, especially when it comes to its relationship with the government and potential support?
Yeah, so we're seeing Vanke's chairman and CEO both have stepped down, citing health reasons, and they've been replaced by people that are closely associated with the state-owned company Shenzhen Metro. I think this is a sign that maybe the government is paving way for a full state takeover of China Vanke after it reported a record loss of over $6 billion. And I think if you look at the local media report, there's mention of capital injection into Shenzhen Metro, which is currently Vanke's largest state-owned shareholder. And there is a careful choice of wording in terms of how that support is going to be implemented. They mentioned a market-oriented approach, which means that the government is going to be careful in terms of giving support to the company. It could be direct capital injection into its shareholder, but not directly into Vanke, the company, because at this point, Vanke is still considered sort of this mixed ownership type of a company that's not 100% state-owned. So,
how rare is this in terms of the amount of state support that's been given? Is it sort of suggested that this is certainly one company that is too big to fail, given the slow progress that's being made in sustaining the property sector more broadly?
Yeah, I think this is the first time we're really seeing the government stepping up to directly support an individual company. We haven't really seen that during this 4 years of China property crisis. China Evergrande, which is a purely privately owned company, a country garden, which once was considered too big to fail. Neither of them had gained any sort of state level support. As Vanke, I think definitely that stakeholder Shenzhen Metro played a role in there, and also I think it's just the significance of a potential failure of Vanke for the entire property market. Vanke is really the household name, the kind of bellwether for the property sector in China. So if this company was led to fail, then it will be catastrophic for the entire sector, and we probably won't expect any kind of rebound in consumer confidence. So I think that's why the government at this point chose to really step up that support. But then it still remains to see whether the kind of support comes from project level. We have already seen Shenzhen Metro kind of taking over majority ownership in some of Vanke's individual projects, or will it go directly into the company level, into that group level to help with its fundraising abilities?
Bloomberg's China credit reporter Loretta Chen there with the latest on China Vanke. We have more ahead on the Asia trade. This is Bloomberg.
A new opinion poll suggests that Australian Prime Minister Anthony Albanese's Labor government is trailing the opposition coalition despite a pre-election campaign blitz. Albanese is yet to set the date for a national vote, but it must be held by mid-May. Our Australia government reporter Ben Westcott joins us now for Canberra, and we've seen a frenzy of to and fro and barbs being traded between the opposition and the government over the past few weeks, right? And are we starting to see some progress being made by the opposition?
Look, it is previously been a universal truth that there's no campaigning allowed before Australia Day, giving everyone a well-deserved break from politics, but that hasn't been respected this year. Both Prime Minister Anthony Albanese and opposition leader Peter Dutton have been out and about, and so far it seems like there hasn't been much benefit for the Labor government. Every poll out, and we've had all the major ones so far, News Poll, Ascent, Shaw, Resolve and Freshwater, all show a lead to the centre-right coalition. But at this stage, it isn't so big a lead that A, it couldn't be overcome by the Labor government over the course of a campaign, or B, it wouldn't necessarily mean a win for the coalition. At this stage, some of the polling would indicate that it would be a Labor minority government governing alongside independent lawmakers and minor parties. But these are still very early stages. A lot of Australians still aren't turned on to the idea that there is an election about to happen. And although Peter Dutton's got a lot to be happy about, the game isn't over yet for anyone.
How are the economic challenges in the country right now complicating politics?
Oh, I mean, right now, Australians are suffering with a cost of living crisis, a housing crisis, and to try and contain that inflation challenge, the Reserve Bank has kept interest rates at a 13-year high for at least a year now. Now, what we're going to really be seeing over coming weeks is whether or not inflation has weakened enough. In fact, we'll be seeing that tomorrow with the new inflation data to allow the Reserve Bank to lower interest rates. It's going to be all eyes on that inflation data tomorrow, more or less. And the government is now expected to potentially push its election past April in the hopes of getting at least one interest rate cut at either the February or the April RBA meetings. But given the somewhat confusing data, the very strong labour market, there's no indication of which direction the Reserve Bank might fall at either of those meetings.
Australia Government reporter Ben Westcott there with a state of play as we await for a date to be set. But our guest today is an independent MP who, along with her other fellow non-aligned lawmakers, may have a decisive role in determining the balance of power in Australia's next parliament. Allegra Spender is a federal member for Wentworth in Sydney's East and joins us now in the studio. Allegra, really great to have you with us. We appreciate your time, as of course it's a busy parliamentary season. At this point in time, as we await, a formal date being set, what would you be looking at in terms of policy priorities that you want to see from either major party?
Look, I think that for many people in our community right now, the economy is front and centre, and this is about cost of living, but this is also about the longer term indicators, the fact that we've had a housing crisis that has developed over 20 years but is really hurting people right now. We have a productivity crisis where it's really flatlining, and in industries like construction, it's dropped actually by 12% over the last 10 years. And so we have really anaemic economic growth, and I think people are really concerned about, do we have the right settings for the long term? And as well, we have this energy transition, we need to deal with that as well, but we need to be making better long-term decisions, and I think that's a real frustration from the community right now.
And those structural commitments are also so difficult to talk about when we have such a relatively frenetic election cycle, right? But I mean, if we take a look at tax, for example, in jurisdictions like the UK, it's a pretty healthy, robust debate. Why does it feel so much more toxic to be talking about that here?
Look, it's really disappointing, I'll be honest, to see how the major parties politically wedge each other on tax. And we went to the last election, for example, with both major parties saying, don't worry, we're not going to touch it. But we know when you talk to the economists, when you talk to the business community, and when you talk to actually people on the street who are struggling, particularly young people, to ever get a house in the first place, tax is a really critical issue. And so that's why, for instance, I've been put forward a tax green paper, because I'm so frustrated that both the major parties have just effectively wedged each other so badly on tax that they're not willing to deal with some of the long-term challenges we face. And they're still, some of them are trying to run attack ads on me as well for actually having the courage to say, hey, tax is a serious issue. Let's put it on the table. We need a tax reform commission. We need to lower income taxes on people who are working because they can't get ahead. We need to make sure the tax system is backing innovation and investment, because we've got now 4% business investment in the non-mining sector compared to 9%. That's not going to work in the long term.
When it comes to property, is negative gearing untouchable?
Look, I think that negative gearing and those tax settings have been overstated, but I think you can't ignore the tax system altogether when it comes to things like housing affordability. And it is a major issue. You see that now Sydney has the second most unaffordable housing in the world. You see that the young person sort of in their 30 to 34, they're now 20% less likely to be mortgage holders or owner-occupiers than a generation ago. So they are really, really falling behind. But I think that when you look at the tax system in relation to housing, I think stamp duty is one that is much stronger in terms of the case for reform, where if a reform to stamp duty, in New South Wales estimates has said that could increase home ownership by 300,000 people, by 6%. So I think there are options to look at the tax system in terms of the housing system, but it's more broadly, it's particularly about how do we help younger working people have the same quality of life that their parents have achieved.
Yeah, with baby boomer generations really heading into retirement, right? What are some of those tax reforms that you want to see in order to close that generational gap?
Look, what I think the biggest one that we really need to get on the front foot is how do you lower income taxes? Because that is the tax that everybody pays regardless of their background and regardless of where they've come from. And I met this young guy recently who said to me, he said, look, I've got everything I need. I've got a great job, so does my partner. I just don't have the bank of mum and dad. And that's really gutting for a country like Australia, which prides itself on the fair go that everyone can have an opportunity for housing. I actually spoke to a young group of finance executives who are working in the finance technology space in their late 20s, early 30s, and they all just felt, look, you know, how home ownership, those opportunities are out of reach. And you know, I spoke to a young woman the other day who said, you know, we've got 2 kids. You know, at this stage, we've got great jobs, but we can't afford to have a third one because of the challenges from an economic point of view and those young people getting ahead. So it is income tax that has to be front and centre in that piece, as well as I think some of those business investment taxes, because we really need to be driving innovation in our businesses, because businesses drive wages, drive productivity, and that's what's really missing the economy right now.
So I know that we're still a ways off when it comes to election results, but as Ben was telling us earlier, it's most likely that we're going to see a minority government. Are there any key issues or points that you would need to see compromise on with the major parties in order to get your backing?
Well, look, we will see what happens, you know, when the election happens and how the numbers fall. But I think the key, you know, 3 priorities I think for my community are certainly that you see a smarter economy, one that is driving productivity, that is really driving innovation. Climate action, it's still really important. It doesn't go away just because, you know, we're having tougher economic times. We still need to make those investments in the long term, and also a kinder community, a kinder society. You know, my community has been hit by a lot of the anti-Semitic attacks, but I also have a really big LGBTQ community, for example, who, you know, like the rest of the community, thinks it's appalling that gay students and gay teachers, you know, can be expelled from school because of their sexuality, and then, you know, really concerned about issues like men's mental health, and particularly young men. So there are different sort of range of priorities, but I think it's about that long-term evidence-based reform that the community is crying out for, and which the major parties are really failing to deliver because of their political wedging.
I wanted to pick up on, obviously, the horrendous anti-Semitic attacks that we continue to see, particularly in our area. But what would you like to see from the major parties, and what would you like to see from the government in terms of both balancing their position on Gaza and Palestine, but also adequately addressing, you know, the hurt that we're seeing in those communities?
Look, I think we've got some legislation that's likely to come up next week in Parliament around incitement to violence, and I'm going to be proposing some amendments to really sort of deal with some of the vilification that can happen, not just of the Jewish community. It does happen of different communities. It happens certainly of the LGBTQ community as well, because we know from the Mike Burgess, the head of ASIO, he's repeatedly said, you know, that words matter, and I think it's really critical that we do make sure that, you know, sort of really extreme vilification that is really targeting parts of our community, you know, that we stand out. And I think my community, you know, across the community has been absolutely appalled by some of those attacks. And I think really want to see much more coming together and much less politicisation over wars overseas. Most Australians say to me, look, you know, we have a range of different views on the war overseas, but we come to this country because everyone belongs. Everyone is welcome. You know, what your faith, what your background, you know, you are welcome here. And as a child of a migrant, I think those values are so important for us to protect right now.
Yeah, it's always startling to see multiculturalism take a hit in this way. And I do wonder, you mentioned that climate remains important, political integrity, you know, one of the cause of how the Teals were elected in the last election. That felt like a watershed moment. Do you think some of that is going to be impacted negatively by economic policy?
Look, I think, you know, for me, I've always said that a guy I met in Bondi actually told me, I asked him, what's important to you? And he gave me the best example, I think, of summating my community. And he said, look, you know, I care about the environment. I live in a beautiful place. I want to pass it on to my kids. I want to live in a kind society. I want us to treat us decently. And I care about small business. I'm a small business owner, and that's really important to me. And I think we need to remind ourselves we can hold on to those 3 things. This isn't an either-or situation. situation. We should be having political integrity. That actually allows us to have the big debates that we need to be having right now, rather than the smear campaigns and the wedging, which actually long-term hurts the economy. So the political integrity is critical. In terms of our energy transition, we're going to have a more expensive energy transition because we haven't faced the facts on climate earlier. And that is harder for business. So what I'm saying on climate is to say, this is about the economy as well as about the environment, because 90% of coal-fired power stations are going to close in the next 10 years. So we actually have to transition our economy anyway. Let's do it in the least cost way that we possibly can. So I think we've got to move away from that sort of dichotomy of saying, oh, you can't have values, for the long term and worry about the economy. We actually, if we think about all those things and hold those ideas together at once, then we can really actually look after the economy as well as the long-term prospects for our kids.
Allegra, really great to have you with us. Independent MP for Wentworth here with me, Allegra Spender. More ahead on the Asia Trade. This is Bloomberg.
Japanese stocks under pressure are being led lower by tech stocks and communication services as we see that global tech sell-off continue in the Asian session. Chinese markets are away on holidays, but the China show is next. This is Bloomberg.